Hi, altcoin Biblers. I hope you are well after a immensely serious crash we had in macro markets. Now, I just want to point out there that if you're a newsletter subscriber or you're in the VIPs or the masterminds, please tune into the extended session of this because I dive into the macro, give you some high-level analysis that I'm seeing right now. And also in the last few minutes, we've also had some really positive news come out from the Bank of Japan, who are wanting to not raise interest rates anymore, which caused a lot of commotion around the carry trade. So I'm getting a lot more positive around how things are looking here. Now, I want to zoom straight into the charts and just give you the meat of the session, guys. I'm looking at 3 charts here. And as always, when I do these sessions, especially when I have limited time with the shorter session, I just want to emphasize again, when I look at this, I analyze it from a risk standpoint and where the market sits currently. I do not want to touch high speculative risk unless you are a high risk investor and you are comfortable with the volatility and the risk that comes with it. So that's what I really want to say here, because if you venture out from Bitcoin, Ethereum, Solana, maybe a few others at the top, you are opening yourself up for those big expansive moves that we've just seen. Again, if you are ready for that, if you have that longer picture, high conviction, 6 to 12 months, you're golden. If you're adding to your position over this period, fantastic. But a lot of people think they can deal with this kind of volatility until it hits them, and they don't know what to do. They don't even add to their positions. They're just like, I don't want to part with any more of my money. You go into the fetal position, you just panic sell or do something silly like that. So again, if this is your first time to experience heavy volatility, like I've witnessed this before, and it's nowhere near the worst one that I've seen. COVID was up there. It was really up there. I mean, Bitcoin raised its value by about 50-60%, I think, in a few hours. I mean, imagine seeing that, and that was before ETFs, before the institutional interest, before Michael Saylor, before Grayscale. So you didn't know whether there'd be substantial buyers after running back to 10,000 after a massive bear market, and then coming back down to 3,000 again towards the lows. So you just didn't know if the market was going to catch itself. You know, whether everything was just going to go to zero. I mean, there's always a risk, in the early stages. Now, nowhere near, no way is that going to happen. But I just wanted to perspective this, because 50-60% drawdown is a heck of a lot worse. And even if FTX, even around that time, if you remember how bad that was, COVID was still worse in terms of punch in the gut types of volatility, where it just happens so fast and you can't think. It's really hard. So I can't emphasize enough how important it is to have dry powder on the sidelines ready to go, so you never feel paralyzed. And also, if you're looking at charts all the time, have some levels where you just like, if it hits this, that's where I want to manage risk and get out of 30% of my position or whatever, just to make yourself feel a little bit more comfortable. Again, full disclosure, I didn't sell a thing. I still own my Bitcoin, my Ethereum, Solana, some higher risk stuff in the back end, but not too big. I did not care, because the high conviction bull market, seeing what this crash actually leads to in terms of liquidity drivers, which is really important. So again, this is a dip to buy. That's all I'm looking at. Let's get into Ethereum. It was hit harder than most other altcoins because of the selling that we're hearing about with Jump, and they just essentially market sold a lot of their Ethereum. But what this does, though, it flushes out a lot of the leverage. It drives us into the support levels, into greater liquidity, where we do see buyers come in very interested. And what that does is it shakes out all those sellers. A lot of that supply is gone. You've got willing buyers coming into the market and moving high. Now, what's really important with Ethereum is it came back down and hit its weekly 200, the 50, the 100. It did fall out of this sideways range area. Look, once it breaks these kind of levels conclusively, it can run really hard. Now we're going to see if the market bounces back. I think it does, as long as everything holds true. And Ethereum, with the ETF driver behind it, especially when you're seeing those outflows begin to get really cool. A lot of the Bitcoin and Ethereum ETFs really did flinch. So the boomers are holding. The people are coming in and buying this stuff. They're looking ultra long term. This isn't, the retail stuff that just puked all their supply. Got to think long term, guys. So the weekly was very interesting to me. If I just go up to the daily, I want to show you one more thing. The aggressiveness of this overshoot was about 30% from around that 3,000 level, which it just held for a very long time, like the $60,000 for Bitcoin. With an extreme move like that, you can see the enormous amount of volume coming through. I do think that was the low, the capitulation, based on volume and a few other things. It doesn't mean it can't come back and retest those low areas, but I think broadly across the market, we have seen the lowest price. Again, I don't care if I'm wrong about that. I think if we make a lower low, that will be the end of it anyway. So, what does it matter? here, those are very interesting area. And same with all these cryptos. They're all having the potential for a massive rebound, but it's how they behave on that rebound. Now they're running back into resistance underneath. There was support and now it's resistance. So it's going to be a hard time climbing back up. So there's going to be a recovery process that happens here. But Ethereum really hasn't moved yet, which is interesting. And Solana has. So I'm looking here, the Stochastic RSI is bottom. You're looking here as well. The daily RSI looks completely bottomed out there as well. So I'm thinking there is an absolutely nice move here of about 10 to 15% for Ethereum to run back into the underside of this demand zone. And if we're lucky, we can crack back into this massive rose we've been in for a long time and then run higher into the back end of the year. So really, really like that. If we're going to Solana as well, Solana ran into its 50-week moving average as well. It has recovered the best out of essentially everything. I love Solana. The chart it shows so much strength, and maybe because of that top 3 ETF narrative, now we're going to see some price catch up in terms of that narrative drive. But we had that sort of fake breakout, the opposite end to shake everyone out. Longs got rinsed, shorts got rinsed, either way. But Solana, the volume coming in here, the horizontal, and how it was bought back up so heavily is such a great sign. It's now back above the 200-day moving average. And as well, it is outpacing completely the Ethereum chart. So this is Solana ETH. Looks like Solana wants to completely rip to new highs. Pretty much is, actually. I'll have to zoom back and see what the go is. But just broadly, if we're looking back over the last couple of years, Solana's looking to outperform Ethereum massively here. So you have to look at your balancing portfolio. If you're bullish on Solana, held some Ethereum, you might want to rebalance or start looking at that. But that Solana is without a doubt my cherry ripe for the week, based on risk, appropriate risk allocation and narrative around the market. Now, on the flip side of that, memes. I'm not saying memes won't recover. In fact, I think they do in a massive, massive way eventually. I just want to exercise some caution, because now is really not the time to go all into high speculative alts. We really want to see how the market recovers and creates those higher floors and recovers those levels, because we could very well be running into that resistance now, I said, and coming back down and really scaring this market. You probably will have another chance to buy some of these lows. So we just have to be very careful. And when I'm thinking about, who is buying this sort of stuff right now, it won't be massive buyers. It will be little bits and pieces here and there, nibbling away at some of these lows until we get a bit of confidence and run higher. But you can just see here, WIF broke down from this crucial horizontal. It's coming back in. So this does look like at the start of maybe a deviation where it's just sort of gone down, soaked up liquidity, and it runs higher, sure. But we really have to wait and see how it interacts with the 10 and also through this cluster here. I really want to see, WIF start to do that kind of move before even, deeper there and then runs through. We want to see a new high trend and higher low trend emerge. Right now, this is just risk city. You really don't want to be buying until we start to see some daily closes back above the end of the horizontal and then more conviction higher. Same with PEPE. Looks slightly better than WIF. It's retaking its 200 here. I want to see it close, but it's running back in. It looks really good right now, and you can be fooled into just buying here. But the daily hasn't closed above the 200. The last one tried, got bought back down. If we get hit on the head here and maybe runs up to the 10 and then could run back down, absolutely. So I've just got a squiggle here. I want to get above the 10. I want to create the sort of the short-term higher low structure for that upwards trend. This is a crucial level because you've got all this volume over here that is kind of levels adhere to. But yeah, I want to see PEPE start to run again. But the momentums on a lot of these charts look fantastic. I mean, you could do a lot worse than buy some of these charts as the momentum just completely bottoms across the space. So I am cautiously optimistic about where we are at, and even if we get more volatility in the short term to the downside, doesn't matter. We're now approaching that back end of this liquidity cycle, and we're about to launch into what is Ralph calls a banana zone. He's looked a bit silly over the journey saying some things like that, but if you have that, the idea of where this is going, and it's going to push pretty hard towards the election and after with those liquidity drivers, I think we're in a good space. Again, guys, if you want a really sort of detailed analysis of where I see the macro situation and where you feel things are at, make sure to become a newsletter subscriber, and I'll release those extended versions. I'm going to do that a bit more often. I'm going to provide a bit more alpha in the extended versions, simply because these are free sessions I want to put out there to whet everyone's appetite, but keep you informed still. But I want to dive deeper into everything else that we're doing, so we can provide the best value content possible. All right, have a wonderful day. We'll catch you again next time. See you guys. Bye.